Good afternoon, everyone. My name is Lauren Cooper, and I'm the lead of the Forest, Carbon, and Climate program here at Michigan State University. And we are so pleased to be hosting the 2018-2019 Learning Exchange Series for the Forest Climate Working Group. For those of you who are unfamiliar, the Forest Climate Working Group is a diverse group of forest interests, including landowners, industry actors, conservationists, academia, and those active with carbon markets. The group has worked together for 10 years to advocate for state and federal policies in the United States that work to ensure sustainable forest use and prevention of land use change. We've currently been in a process of reinvigorating our focus and activities and welcome any inquiries into our work. So please reach out if you have any questions or you think your organization may be interested in joining or being involved. As you can see on this slide, we have a full lineup of speakers as part of our Learning Exchange series, and these are up on our website and includes individual registration links. So please head there to register for any upcoming events. You'll receive calendar invites and reminders. And for any of the sessions that look of interest, but you think you've missed them, please know that there are recordings available on our website and related resources. So feel free to check it out if there's something jumping out to you that you weren't able to join. I'll also note that our next Learning Exchange series will feature Josh Parrish of the American Forest Foundation and Rita Height. Rita Height is who is actually from American Forest Foundation, and Josh Parrish of the Nature Conservancy. And they will present the Family Forest Carbon Initiative. You can register for that session today on our website or by clicking a registration link that'll be sent up in a follow-up email later this week to those on as members of the Forest Climate Working Group or on the Forest Carbon and Climate Program email list. Today, we are very excited to introduce our two speakers from Forest Trends Ecosystem Marketplace. We have Kelley Hamrick, who's a program manager, and Stephen Donofrio is a senior advisor and director of the supply chain and the ecosystem marketplace initiatives. They will present forest carbon markets overview and potential. But before we let them get started, a couple notes of housekeeping we'd like to share. We have if you'd like to receive registration details and any upcoming news for the Forest Climate Working Group and or the Forest Carbon Climate Program, please email forestc@msu.edu to join our email list, or we can send your information along to the Forest Climate Working Group. For those that are interested, attendees today will receive a 1 CFE credit from SAF. This happens automatically if you've registered, but please reach out to forestc@msu.edu if you have any questions on that. And again, the session today is being recorded and will be posted on the web along with any supplemental materials such as the presentation slides or any links that are mentioned today in the talk. This will happen in the next week or so. And if you've registered, you'll receive an email letting you know when and where to find this. And then finally, the session today will be followed by a Q&A. And so for those that are joining by phone and are unable to access the portals or the Zoom interface, feel free to send an email to forestc@msu.edu to submit questions for the Q&A. And if you're on the Zoom interface, you can look at your menu bar. You'll see the word chat with a little drop-down triangle next to it. Here you can offer up questions at any point during the presentations, but we will compile and present questions to the speakers in the Q&A session at the end, time permitting. And we should note, in the case of outstanding questions, we will send a document to the speakers and get their responses in written format, and we'll post any outstanding questions and the answers when we post the recorded video and supplemental materials. So again, feel free to submit questions at any point, and we will organize them and present them to our speakers at the very end. And so with that, I think that's all for the background. Kelley, will you please share your screen and begin your presentation?
Yes, let me share. Okay, and just to check, can you see my screen right now?
Looks great.
Okay, perfect. Hi everyone, and thank you again, Lauren, for inviting both Stephen and I to speak today. I'm very excited to share some of the work we've been doing on forest carbon markets. So brief background, I'm a program manager of Forest Trends Ecosystem Marketplace and Supply Chain Initiatives, and Stephen is the program director. In this presentation, I will be talking about what we are doing on the ecosystem marketplace side of things, and then Stephen will talk about what we're doing on the supply chain kind of side of things. And of course, we're seeing more and more overlap across these different programs as we go on, but we'll talk about that a little bit more in our presentation. So a brief background for those of you who may not be familiar with us. Forest Trends Ecosystem Marketplace Initiative is one of several programs within Forest Trends. We produce reports that track environmental markets, including water, biodiversity, voluntary carbon, and forest carbon markets. We also write articles that cover the latest policies, financing, and project development in these areas. And all of our articles and reports are freely available on our website, which is listed here. So I wanted to kind of take a quick step back and just kind of put things into context. As we all know, climate change is an increasingly growing problem. And there was a recent study that came out last year that found that natural climate solutions, which essentially is the Earth's ability to sequester emissions, is a cost-effective and substantial solution in the fight against climate change. However, as this graphic by the coalition Nature for Climate shows, it's often drastically underrepresented in national and international climate policies and in markets. So forest carbon offset markets are one way to support and scale up natural climate solutions. Offsets are based on the notion that some emissions reductions are easier to do and more cost-effective to implement than activities done in other places. And forest carbon offset prices typically will range between $2 to $10 a ton per ton of carbon dioxide or equivalent greenhouse gas that has been reduced, sequestered, or avoided. Currently, forest carbon offsets are traded and financed through either voluntary carbon markets, compliant carbon markets, and non-market mechanisms. So you can kind of see those three categories here. I don't want to focus too much on the financing side at this point, but I just wanted to kind of show you how we break out these different sections in our State of the Forest Carbon Finance report. A quick kind of overview of what each of these means. Voluntary carbon market activity is where we track transactions of forestry and land use offsets on the global voluntary market or through government-backed voluntary programs within specific countries. Compliance carbon market activity is where we track offset transactions that are happening through compliance markets that are actually mandated by a government. And then finally, we also track REDD+ programs, and these essentially are usually national or jurisdictional level programs that occur in countries with tropical forests, and they're meant to try and incentivize those countries into keeping their forests standing. And payments for the emissions reductions produced by these programs are not done on either the voluntary or compliance markets at the moment. And this typically results in offsets that are not tradable and don't appear in any sort of marketplace with multiple sellers and buyers, which is why we've called these non-market approaches. And just a quick note for everyone about kind of the difference between projects versus programs. Essentially, a project is obviously smaller in scale and has kind of a defined geographical boundary. Projects are currently what produce offsets that are traded in the current voluntary and compliance markets. On the other hand, programs are usually at a state or kind of a jurisdictional scale and are usually covering entire landscapes. And that's currently what's really happening with these REDD+ non-market mechanisms that we're seeing at the moment. So I'm going to do a kind of brief background on these three different types of financing that we're seeing for forest carbon. I just wanted to kind of repeat that we will be recording this, and so I will be kind of going a little bit quickly, and if you do have additional questions, pretty much all of this information comes from our reports, and you can find more information there. So before I kind of dive into things, I wanted to kind of take a step back and just make sure we all understand what is a market and where are they. So this is a bit of a quick question for voluntary markets. The global voluntary markets actually don't have any centralized marketplace where buyers and sellers can easily meet. Instead, most of these transactions occur through discrete deals. And so that's one of the main reasons why we collect this data for our reports, because there's not a whole lot of transparency about what's happening in these markets. So you can see here that kind of every country in the world is outlined in pink, and that's because basically every country can have voluntary forest carbon projects that are tradable. However, there are some voluntary carbon markets that are geographically bound and regulated by governments. In 2017, we tracked 7 such markets in various stages. This includes, for example, Korea has a voluntary forest carbon offset scheme. And France also has one that's called the Voluntary Carbon Land Certification Initiative. At the moment, these are kind of typically quite small programs. They only operate within a country, and they target buyers within those countries. You can also see here on this map that there are 13 existing compliance markets, which are shown in blue, and 7 markets which are in development in orange that can allow for forest carbon offsets. One of these is out of date. Unfortunately, Ontario pulled out of the cap and trade program they were going to join. But this is just to say that kind of over time, we're seeing more and more countries start to include forest carbon offsets within their carbon taxes or cap and trade programs. This shows a kind of very high level view of how an offset is produced. Essentially, there's multiple stages in an offset's life, starting with sort of the project idea note, which is when the project developer just will think about what this project is going to look like. Basically, then we'll go into the project design document when sort of the specifics are fleshed out. Validation and verification occur when a third-party auditor will come and visit the project site and really kind of double check to make sure that things that the project developer says are happening are actually happening. And issuance is once the project has actually avoided, reduced, or otherwise kind of offset the emissions. That's when a global third-party standard will then give that project offsets that they can trade. And trading can happen in a number of ways because there's no sort of one set marketplace. There's a number of different avenues an offset can take, from going from a project developer to ultimately an end buyer. And so that middle ground is what we call transactions, and retirement happens when an offset is no longer able to be traded and thus is kind of permanently taken off of the market. This slide shows the different number of active voluntary carbon projects around the world. So you can kind of see the number of active projects, also the number of offsets issued for each of these project types, and the number of offsets retired for these different project types. So you can get a little bit of a sense of the scale of some of these different projects, particularly that you know, the most projects that we see typically are avoided conversion types, and those are also the ones with by far the largest amount of offsets issued and retired. And then the main point I'd like to give on this slide is that pricing for these offsets is highly variable. Generally, it's around $4 to $10 a ton. It can vary due to a number of factors. One of them, which is what's shown on this slide, is the third-party standard that's used can affect the overall project type, the project price. But other potential factors that can influence the price include the project type, the project location, the transaction size, who's buying, if it's an intermediary buyer versus an end buyer, and then a host of additional other buyer preferences, such as some buyers might choose to purchase offsets just based on the cheapest cost. Others might prefer to source offsets from, you know, that have particular additional benefits like protecting biodiversity. And so overall, you know, what's shown here are averages, but we actually track actual prices ranging from less than 70 cents per ton to more than $70 per ton. Which is obviously quite a lot of variation. So that's kind of a really brief overview of kind of the market side of things. Moving on to the non-market side, essentially what I'm talking about here are these landscape level REDD+ programs. These are typically developed by governments, and at the moment, a lot of them are receiving their funding through other governments. So what's shown here are sort of some of the main different funds which will invest in these REDD+ programs. A lot of these get their funding from donor country governments. So for example, NIFC is through the Norwegian government. The World Bank's Forest Carbon Partnership Facility is through kind of a consortium of donor governments. And the main kind of takeaway from this slide is that what you can see here is that a lot of these funds have committed to pay a lot of money for REDD+ programs. for the results from our RED Plus programs for sort of the offsets. But in many cases, there haven't been that many disbursements at the moment because many of these programs haven't actually started to produce emissions reductions yet. And I think in general, that process has taken a little bit longer than everyone kind of initially imagined back in 2010. What this shows is a map of where these different RED Plus programs are. So you can see a lot of them are sort of in these tropical forest countries. You can see here a little bit too about like which ones are part of which ones are funded by which funds. So for example, sort of the yellow are those funded by the RED Early Mover Program. There's some Norwegian bilateral agreements through NICFI. And so this kind of just gives you a sense of where all of those are. Okay, so that's all a little bit about where we've been with market and non-market mechanisms for forest carbon offsets. I did want to spend some time also though talking about upcoming trends. So this is a really basic chart that I made that kind of shows where I think there are some upcoming trends happening in the space. So one of them is that there is kind of increasing progress that we're finally seeing with RED Plus programs. Another is Paris Agreement decisions and how they might impact voluntary markets, compliance markets, and RED Plus programs, CORSIA, compliance markets, in setting, and non-carbon quantification. I'm going to go through each of these in the following slides. So new progress in RED Plus programs. So I did mention before, I think a lot of RED Plus programs, a lot of people thought that they would be operationalized sooner than it's taken. But there is some interesting progress that's been happening recently. So I just wanted to share these two links. The first is the Forest Carbon Partnership Facility link. And let's see, where did that go? Oh, okay. Let me end show really quickly. Here we go. This is very busy, as you can see, but essentially this shows all of the steps that these programs have to take before they can actually start producing emissions reductions and get paid for those. And so, so there is some funding that's separate, that's not sort of payment for performance funding. It's just funding to help these countries get ready. But you can see here kind of all the different steps that these countries have to go through first to get ready. And then to be in the carbon fund, there's a whole additional host of steps. But in March of this year, the World Bank just signed emissions reductions payments agreements called ERPAs, which is in this very far column, with both Mozambique and the Democratic Republic of Congo. So we are sort of finally seeing actual potential payments that can start happening with these programs. And sorry, let me go back to here. And let's see if this works. The other thing I wanted to mention as well is the Green Climate Fund is another sort of huge potential funder of RED Plus programs. And they also have just recently decided at the end of March to pay Brazil about $100 million for keeping the Amazonian forest standing between 2014 and 2015. So that's sort of another instance of where a country is finally actually getting paid for their RED Plus efforts. And so this is just the link where you can kind of see where they have approved projects and additional readiness funding as well. So the Paris Agreement, one of the sort of problems with the Paris Agreement is that because every country now is making a commitment to reduce their emissions, there's a big question of who gets to count which emissions reductions. So in the past, what would happen is that countries that were part of the Kyoto Protocol would buy offsets from countries that weren't part of the Kyoto Protocol. But now that everyone is sort of taking a stab at the problem of climate change, there are now some countries that are kind of rethinking whether or not they want to export their emissions reductions or whether they just want to keep them for themselves. And so this is potentially a problem with international trading, and this might also affect voluntary carbon markets because a lot of voluntary carbon transactions are international, and so there's a question of how that would be counted and whether or not countries would allow that to be exported, whether or not they would want to just keep it for themselves. There's a lot of kind of thought going into this at the moment, so I did want to share 2 links. One is that I think Japan is probably the one that has actually started to have bilateral agreements with other countries to try and address ways that they can sort of purchase emissions from other countries. It's called, what they have is called the joint crediting mechanism. Oops, this is the wrong one. Okay, well, that link isn't working. Anyway, you can look up on that. The other is there is a voluntary carbon market group called the International Carbon Reduction and Offset Alliance, and they are sort of trying to collect a lot of information about ways that the voluntary carbon markets could kind of coexist within a Paris Agreement framework. And so there's a lot of resources, and I just wanted to kind of alert you to all of the ones that are currently available. CORSIA is basically under the Paris Agreement. What's not included are international emissions from aviation and international emissions from shipping. And so CORSIA is an attempt by the aviation industry and by the International Aviation Organization to essentially try and regulate those emissions. And it could become the world's largest carbon market. And at the moment, we're not sure what offsets would be allowed into it. It could be that RED Plus program emissions reductions are allowed. It could be that voluntary carbon market offsets are allowed, and it could be that compliance carbon market offsets are allowed. And so at the moment, there is currently kind of no clear, no clear guidance on what will or will not be allowed, but that will hopefully start to be decided soon by the technical advisory body, which was just announced a couple weeks ago by ICAO. And you can stay kind of up to date on some of their news with this link here, which kind of will just show what the latest is with CORSIA and what ICAO is doing. Finally, we're getting down to kind of the last few things that are happening at the moment. We are seeing more and more countries start to create a compliance market, either a cap and trade program or a carbon tax. The best source with kind of the latest information on this is the World Bank's carbon pricing dashboard. And you can really see, if you kind of start to go back with this timeline, how there's definitely more and more interest over time from countries in producing markets. And I think 2018 is where you see a lot of, 2019, sorry. You can see that there was a lot of activity just in this past year in terms of new programs being announced. Finally, kind of getting away from offsetting, there are a few initiatives that have been announced recently or sort of starting to really show progress recently. And that is with these different programs that are looking not just at offsetting, but other ways to quantify, to bring the rigor that offsetting provides to additional sort of low carbon investments. So insighting is essentially when a company, instead of purchasing an offset, will be investing within its supply chain to try and reduce emissions. At the moment, ICROA is trying to work on a white paper. It's not published yet, but I think if it is, it's going to be updated on this link right here. But they're trying to come up with sort of their best practices on what would be best practice for insetting. Sustain Cert is a new initiative launched by the Gold Standard. And basically, it's a way to try and actually quantify emissions reductions that either funds or corporations want to do within their supply chain. And so you can kind of read about that on this link. And then Climate Forward is an initiative by another voluntary carbon standard, the Climate Action Reserve, to also try and actually quantify companies' emissions reductions activities within their supply chain. And as you can see here, they currently have 4 projects, all of which sort of first appeared on this portal back in February of this year. So this is also a very new kind of initiative that's happening. And I think I'm running out of time, which is great. So this is the last slide. Finally, we're also seeing some interest by some of these different voluntary carbon standards, not just in kind of the insetting and like investment side of things, but also in trying to quantify non-carbon benefits. And so BERA recently released their Sustainable Development Verified Impact Standard. You can see a list of the projects at this link. And essentially, they're trying to bring a lot of the rigor that is given to measuring and verifying carbon to these other kind of co-benefits that many of these projects produce. And similarly, the gold standard also is doing that as well. They have a number of different methodologies that try and quantify these different kind of non-carbon benefits. And so that is here. For example, you can see here, there's their gender equality requirements and guidelines, and that's giving, you know, fairly strict guidance around how to quantify gender equality. Okay, and I think I'm right at about 20 minutes. So at this point, I want to stop and say thank you all for listening. I'm going to pass things over right now to Stephen to talk about what's happening on the supply chain side of our program, but I'm very interested in answering any questions that you might have at the end of our presentation. So at this point, Stephen, perhaps if you can try and request the screen access.
Thank you very much, Kelly, for your presentation.
Great, thanks. Okay, just bear with me 1 second, and I'm going to do my best here to make this work. Okay. How are we looking? Do you see the screen?
Yep, looks
great. That looks great.
All right, fantastic. Well, I mean, as you can tell, Kelly has a wealth of knowledge around markets, and I think she could have filled out the whole hour and then still had enough content to spill over into another hour. But you know, we're trying to pack a lot in, so thanks so much for you know, your patience with that. And as Kelly mentioned, there's probably going to be a lot more in my presentation that that you may have answers for and would want to follow up on. So you know, please do feel free to reach out to us by email or you know, whatever else it is. So so I guess I'll just try to be, you know, quick around you know, the kickoff here, where at Forest Trends there's a number of initiatives, and so Kelly and I sit in sort of this this category where we're focused on data and transparency, with the recognition that you know, in order for markets, in order for systems or supply chains, anything to really systemically change, the more transparency that we have in those different universes, the more that we'll have available to us to make decisions and actually, you know, alter the course. So so that's the fundamental part that links supply chains and ecosystem marketplace together. My background, I actually spent some time working in markets at the Chicago Climate Exchange, and then moved more into the corporate sustainability side. So it's really interesting to, as Kelly mentioned, to kind of see where the worlds are starting to come together related to kind of jurisdictions and landscapes and tackling supply chains and markets together. We'll get into that in a little bit. So on the high level, and Kelly mentioned this, is, you know, about 30% of the climate solution for the Paris Agreement can be achieved through natural climate solutions. And so that covers a lot of things, from wetlands and various sort of activities to reforest and rehabilitate lands, but also in terms of our agricultural systems. Cattle is the largest driver to deforestation among the four primary commodities of palm, pulp and timber, cattle, and soy. And when we started supply change, I guess we kicked it off in 2015. So it's been 4 years that it's been, you know, in a live form. That these four commodities were really kind of hot topic, you know, really the ones that all companies, including Consumer Goods Forum and TFA and many other leading groups out there, were focused on. And since then, those four have the interest area has expanded beyond this four into, you know, other commodities like cocoa and rubber and coffee. And so the more that we are able to, as I mentioned, tackle this transparency challenge and bring more awareness to the different supply chains and the companies operating in them that are not only exposed to the risks that deforestation presents, but that are managing that issue, that are setting goals and commitments that then opens us up to being able to tackle further down the line, other commodities that may not be as globally wide and universal, but in terms of exposure, but maybe more niche in certain geographies like Cote d'Ivoire or Ghana for cocoa and rubber and other things. So for other places. But what we, I mentioned that in 2015 we started, but what we do is we try to focus on really kind of the producer, so the source all the way to the retailer and the end customer. The reason is that when we originally wanted to kind of implement this program, that we actually wanted to be more on that upstream side, but the quick challenge that we faced was that we didn't really know who those actors were. And so what we've seen over the years, by most of the focus going to the traders, the manufacturers, the retailers, while you do have some big producers like obviously Asia Pulp and Paper and Golden Agri Resources and some really big companies, that you end up having the challenge of a lot of small producers or small companies feeding in to that supply chain. But what we've seen over the years is that the sort of downstream side, through their engagement upstream and through various initiatives and efforts on their part and investments into providing transparent information about who their suppliers actually are, is now we actually have more of an understanding of who those upstream companies are and how these systems work, and that brings us into more opportunities of dealing with more geographic specific commitments and jurisdictional engagement and programs that can be interwoven between what companies' activities are, government policies, and so forth. So at this stage, what Kelley mentioned before about news, I don't want to repeat that in publications, but I think the unique aspect is in supply chains is that the way to think about it is more of a tool. I mean, it's a web tool. The data that we do on the back end in terms of collection and research that comes from public sources. We have a partnership with CDP that provides us with carbon disclosure CDP data on the forest program, and then that's sort of a one source, and then we go to sustainability reports and websites, submissions into RSPO, Roundtable for Sustainable Palm Oil, if those companies are members of that initiative. And so any other public disclosure reporting, it might even be just a PDF policy document, and that's what we pull in and amass this what we understand to be the largest database of companies and commitments and policies to addressing commodity-driven deforestation. So it's all free to access, supply-change.org, and anything we do has also been free to access. We're supported by the Global Environment Facility and others, so to be a public good. Just to give a quick snapshot of 2016 to now, our job is to continue to expand our reach and how many companies we can cover. The challenge is that if we are solely focused on our companies for the sake of companies, then how do we know if those companies are actually of interest to the stakeholders? And so the way that we've expanded and brought in all this data over the past couple of years, which is different than how we started, is that we've been trying to do this in collaboration with other organizations. And so IFC, for example, and working collaboratively with them on, I'll show a little bit more about this later on in the call, but we looked at Paraguay and beef, so it's specific geographic area and specific commodity focus, and that expanded our company list in order to make sure we had a full picture of the companies operating in or acquiring cattle from Paraguay. But you can see that there's been a huge jump just over the past couple of years in the number of companies, and The one thing I just want to point out here is that there's a difference between what we're researching, which is those companies we know that have exposure to these commodities, and then those that actually have commitments. So you see that difference there. And then there's companies without commitments. That number is increasing, and that is a factor also of as we added more companies into our process, we'll see more and more of these companies appear, as well as companies that have commitments. And then that commitments to reduce or address deforestation, that 848 number, that's related to the 484 number. So one company might have multiple commitments for a particular commodity. If they're looking at certain product groups that they might offer, they might have a different commitment, or they might also have different commitments if they have more than one commodity that they're exposed to. So the platform is online. I mentioned this. We just show a quick glimpse of a commodity specific page. So the way we break out the information here is that you'll see the entities profiled. So that means we have 259 companies profiled that have a commitment for timber and pulp. And then the breakdown here, obviously this doesn't add up, all these numbers in the product groups don't add up to that entities profiled. And that's because, as I mentioned, there might be more than one product for an individual company that's profiled. That's the type of detail we try to get into. This is the various types of commitments and policy elements that we track, and there's actually several more that's in the back-end database that we haven't brought into the website yet, and that's in the next phase of our web development. But you can see here that it's not just a deforestation, and we really try to see the holistic nature of goals that in order to address deforestation, companies will be developing policies and implementing other goals around improving yields and respecting animal welfare, for example, which all these things do add up into the global landscape. And we track this for each individual company. So when you go to a company profile, which I didn't include those individual policy elements here, there just wasn't enough space. But this is sort of a high-level glimpse at some of the information that we include into a company profile. So just look at HP. It's a company we recently did a refresh on back, I think it was in end of February of this year. And what we try to do is take that high-level company commitment, make it really quick and easy to read, provide the link to that source document, what is the self-reported progress, and then show that progress over time. So as we continue to research these companies, this information will change, and so encourage people to check back on those profiles. And we also do welcome companies to contact us if they have released new information since our last update, or if there's a particular thing that's off, and that doesn't happen very often, but any research process does come with its error. So we welcome that. And we break this down by different sectors, and as you can see, food products, food retailers, consumer staples are really the largest in terms of those companies with commitments, and also those companies without commitments, with farming also being included in without. So then also just to show you that we are very aware of the fact that not all companies are publicly held, and also that you can't only choose companies that are on the large or high revenue, high market cap side of things as well. So won't get into the details of this, but it's worth kind of looking into to see if there are any companies that when you search on the website, which you can search by an individual company, if any companies aren't there that you think should be, or maybe we've done the research but haven't found a commitment for, welcome you to contact us and let us know. And then this is what one of the things that just to highlight here, what we mentioned before, in terms of expanding our geographic reach, we want to be able to bring in more of that focus on certain companies and certain geographies. Most of this is was dominated by United States, Canada, Europe, and that's to do with the fact that our research methodology starting point is companies that are involved in leading initiatives like the Consumer Goods Forum, the Tropical Forest Alliance, and various others where most of their reach is in those geographies. So then also to show you in terms of the impact of deforestation and what the where that actually lines up in terms of companies with commitments. So this is a couple of years old, this data, but it's pretty consistent with what it is today, where even though cattle is the largest driver out of these four to deforestation, we have the lowest number of commitments tracked in our platform. So some of this has to do with, maybe very obvious things like the commitments that we're finding for palm and timber and pulp have a lot to do with sustainable certification and being able to actually quantify a volume of a commodity that is in compliance with a goal. And so, with cattle, that may not be as easy to do unless it's something like a leather working group, or there is some other initiative that can actually certify the sustainability of the beef or tallow or something else. But we're finding that because of these commitments in terms of lofty goals around zero deforestation, there's no prescribed approach of how to actually implement a goal like that or report on progress that, we are seeing that there's still growth in commitments, but there's an imbalance there. So I won't, again, spend a whole lot of time on this one because it just continues to reflect, the fact that, the company commitments are increasing. This is 2017, but 2018, it's been consistent. I think the only disclaimer for everybody to be aware of when looking at charts like this is, does this mean that the pace is slowing down, or is it simply a fact that we can only research so many companies in a given day, week, month, a year? And I think it's a combination of the both of those, with 2014 being a huge year with the New York Declaration on Forests being announced and really galvanizing a lot of companies to be a part of addressing commitments and deforestation. And then we one of the key aspects of supply chains is, can we track the progress over time and be able to see are companies achieving their goals, or are they not? And because this is all coming from documents that they've prepared and their own progress reporting, there may be some gaps in this, but based on what they're saying, and when we looked at 2016 and 2017 companies that were consistent year to year, we did see that there was an increase in companies reporting progress. So the drive for greater transparency, the pressures wherever they're coming from, whether it's internally within the company to report on their goals, or it's from investors and shareholder resolutions or other types of engagement tactics and other type of campaigning groups. But the reality is that whether or not it's good or bad news on being able to achieve the goal, the transparency is essential to being able to provide stakeholders with an update. And so what that kind of then leads us into is thinking about, well, if companies do have a goal and they're not providing those updates, how do we characterize that? And is there something that's a tell embedded within that? And I'm just looking at the time, so I'll start to rush forward so we can leave at least 10 or 15 minutes for Q&A. But to come back to this on your own time, to look at dormancy, which is essentially that companies are not providing transparent details on their commitments. And then this was a recent report we did with Ceres and specifically for their investor network, where we looked at traceability, and the reason being traceability is from the investor perspective, a real indicator of a company being able to meet their goals. So if a company downstream has a certain goal and they're saying they're implementing it, well, if they can't identify who the actors are all the way to the source, then how effective can they be? Or is it that they need to be able to understand the geographic source, maybe not the individual actor? But there are a number of questions that we explored, and those are listed there. And then we also have just completed an analysis, as I mentioned, with IFC specific in Paraguay. And this isn't really the findings because we haven't launched this report yet. We'll be launching it very, very soon. And but I want to provide this as a teaser to give you a sense of how companies are expressing their commitments. And when you look at this, you can clearly see that there's a lot of variation. And there's different ways that companies are making their goals and stating them. And then another quick teaser is this is some data from our 2017 report, but what the general kind of this general group of organizations, companies, NGOs, UN bodies that are working in this space, that as we approach 2020, which is a key benchmark year for a number of companies because of the Tropical Forest Alliance 2020, the Consumer Goods Forum, which had a board resolution for 2020 goals of zero net deforestation. New York Declaration on Forests is aligned with 2020 as well as 2030. That we can track the membership of those various initiatives to see, how well companies within them are doing, but also how well those initiatives are doing. And so we'll be doing something over the next 9 months with our website to integrate some of these kind of charts and graphs into a more regularly updating and web accessible format. So stay tuned for that. And then I'll just rush through these, but there's a few things to be aware of around Qantas convened, I think 40 some odd groups, companies, NGOs, and others to address the issue that we couldn't quantify the GHG emissions associated with the deforestation from agricultural commodities. And this is particularly important as we think about science-based targets for companies and how do we actually contextualize GHG emissions into the wider company GHG inventory. And then also to kind of fast forward is the landscape standard, which is an initiative between Vera, Rainforest Alliance, and CCBA. The goal here is to look at the landscape and not just an individual company or individual company supply chain, and see if we can have greater knowledge about those landscapes and be able to manage those risks more at the landscape level rather than just the production unit. And then also the accountability framework. This is hosted by the Rainforest Alliance that has a strong steering committee, and it's really that this is meant to guide companies throughout the process of implementing and developing ethical and sustainable supply chains. So we have a partnership with them, providing knowledge and data from our work and helping to inform that. This is not a protocol, but it is a framework, and the hope is that this will help to bring clarity to companies as they are new into setting goals or have been working in this space but need some guidance. So I will leave it there, and I know we've thrown a lot at you, and I apologize if I took up more than the allotted time, but I think we've now left about 10 minutes for Q&A, and I will pass back my sharing of the screen and welcome any questions.
Thank you very much, Stephen and Kelley. These are both fascinating presentations. I am going to, I can kind of just maybe leave my leave the screen sharing for kind of up for grabs here, because I think some of the first questions, Kelley, you may want to pull your presentation back up. I'm going to move through the questions a little quickly. We do have some great ones, but I have a feeling we're going to have to roll over into following up with you both afterwards and posting some responses. So I'll get going here. Kelley, one of the first questions was to go back to the prices that you had based on the standard. And this question says that they assumed that like VCS plus CCB would have a higher value per credit, but it looked like in the graphics that that it was lower than just the VCS, and they wanted clarification on that.
Yes, and let me share the screen. So that was about this. Yeah, so for those of you who maybe aren't quite as familiar with all these standards, so basically, you know, Verra is a nonprofit third-party standard, and they have a standard for the carbon markets called VCS, but then they also sort of have this additional standard that's typically tacked on to VCS called the Climate, Community, and Biodiversity Standards, which generally just tries to make sure that the projects, you know, are also, you know, as the name implies, like also thinking of not just the climate benefit, but also benefiting the community and biodiversity. So it is kind of at first glance a little weird that forest carbon offsets that don't have the additional CCB certification have a higher on average price. I'd have to double check the data to be certain, but I think when I was looking at this, because we did collect this about 2 years ago, that the reason for that is that most Verra projects are going to be REDD+ projects based in tropical forest countries, and having that CCB standard is really kind of key and expected. Whereas I believe there are some additional forestry and land use carbon projects out there that perhaps aren't in tropical countries. They might be in sort of other parts of the world. And I think those were the ones that, and I think some of those were actually maybe in the US. And so the necessity of having the CCB standard, I guess, was just not seen to be quite as valuable, and just because of like the strong institutional framework within some of the countries that those projects were taking place in. And I think also that the slightly higher price can also be reflected by that, because if it is in a more developed country, just the cost of doing the project is going to be higher. And so it kind of makes sense that we'll see overall like a slightly higher price going on there. I would have to kind of double check the data to make sure that's what I just said is accurate. But I think that was what I remember from when I was analyzing it a few years ago.
Great, thank you so much. And I'm going to float another question to you as well, since you're talking about this. Another question is: have you identified, as far as the validation and verification bodies themselves, have you identified any preference for credits that come from particular validation or verification bodies, or in other words, does the VVB influence price?
Interesting. That's not something we've ever collected. So I unfortunately don't have a good answer for that. We only collect information about kind of the third-party standard that has approved the offset, but not about the particular validators or verifiers that have kind of you know, been a key part of that process.
Okay, great. And then one more quick question for you. We have a number of questions about when are your next reports coming out? So the state of the forest carbon finance in particular, state of forest carbon, what can you tell us about when we can look for new reports?
Mm-hmm. I'm super glad you asked about that. We currently are in the process of trying to launch a survey to collect information on the voluntary carbon markets. We are also currently looking for organizations who are interested that want to join kind of an advisory group that we're hoping to set up. And we're also looking for organizations that value and use our reports to provide some financial support for us to kind of continue to do these reports. So if you're interested in kind of any of the above, please do reach out to either Stephen or I. I don't know if I put my email on the end of this, but we can follow up with our emails. In response to the question, at the moment, we are hoping to do a state of the voluntary carbon markets report, but we currently don't have any plans to do an update to the state of the forest carbon finance report. But if there's enough interest in funding, we are happy to change our minds.
Okay. Of course. Okay, thanks so much. And then I'll switch gears here, Stephen, and ask you a couple of questions. And I think you answered this, but maybe it's good to clarify. You know, you highlighted that it's company self-reporting for supply change, but can you clarify who are the companies reporting this data, and is there any sort of verification in the accuracy of the reported information?
Yeah, and that's a question we get a lot. You know, our role in a way is to sort of take things at face value for what companies are publishing. And the theory of that is, you know, if companies are publishing this information onto their websites and sustainability reports and CDP disclosures, so to name just a few. I mean, we have different categories. So the one category I've just kind of talked through are those kind of self-reported, and then in the self-reported is, are they on their own kind of mechanisms, or are they through a third party? So the website, even if it's a sustainability report that's according to the GRI, Global Reporting Initiative standard, that would be considered, a sort of a primary document, versus a CDP disclosure or a report into the Roundtable for Sustainable Palm Oil, the Responsible Soy Network as well. So you have the Roundtable for Responsible Soy, that the companies that are members into those platforms will need to submit annual updates. And so those are I would think those are kind of more of where the accountability needs to be set in place. And, CDP is a collaborator with us. And so we talk about how we pull, data from them, and then how do they ensure that there's verification taking place. We do also, aside from that, we do look at how companies are self-imposing verification or audits on their land. So they might, be providing numbers around certified hectares, and that might go into something like the Forest Stewardship Council, or there might be something more kind of just independent and self-governed, by the company hiring an organization just to provide, some remote sense data that provides that level of visibility. So there's a lot of different ways that we try to track that information, but we don't then, just to be clear, we don't then take what we find in public reports and then do our own verification of that.
And then kind of a related question is, like thinking of, I think this is a perspective of like a challenging way to think about this. And I know that you just said you don't do any direct tracing or verification, but how do you consider like companies that are trading, for example, from like South America to China? And can you just talk a little bit about how you're treating more of these kind of farther away international transactions?
Yeah, I mean, well, there needs to be transparency in order for us to track it. And, we're not, like, I think the traceability question has to also be defined a little bit, so that the action of tracing is done first. Companies have to kind of know their sources, or, who the actors are that are in their supply chain. And that is a completely fundamental shift in terms of how commodity markets have been operated, since the beginning of time. And so now, instead of just worrying about quality and price, we're also worrying about, who the actors are, what the origin is, and, those various other factors. And so for what we are able to do on our side is identify those companies that are providing those supplier lists. And that might take you down to the mill level, it might take you completely to the plantation. But the more and more that companies are being transparent with that, then we'll be able to track that on our side and be able to identify other company actors that might enable other companies or encourage other companies to be equally as transparent about what their supply chain is.
That's great. Thank you so much. And I think maybe we can squeeze in one more question. And so I guess I'll choose one that both of you can probably chime in on, which is about CORSIA. And I know, Kelley, you specifically talked about this. But the first part is, are there any insight to when CORSIA will reveal which offsets will be accepted? And then the second part is, is CORSIA linking in with, is that specifically linking in with any of your work, Stephen, looking at like landscape level planning and commodities?
Yeah, I can take the first stab at that. And I guess just to preface it by saying a lot of what is happening with CORSIA is very opaque. It's not a super transparent process. And so this is my understanding of how it's happening, but I might be wrong. I've been trying to follow it, but I keep kind of getting corrected on a lot of the subtle sort of technicalities and politics that go on. But my understanding is that essentially there's kind of two parts to the process of CORSIA, of the negotiators figuring out what offsets will be eligible within CORSIA. One part is through kind of the overall negotiations, which kind of happen every 3 years and I believe are kind of currently happening right now. And that's trying to look at currently, like, what are the eligible kind of criteria for standards that will be allowed into CORSIA, and they have publicized that. I personally did not find it to be super helpful. A lot of what that I can remember that was kind of mentioned in there was, making sure that the standards that were eligible, had ways to kind of track offsets to make sure there's no double counting. And, basically every voluntary carbon standard out there uses a registry for that. So, I didn't find that kind of guidance super helpful with regards to like which offsets will actually be eligible. This second kind of process, which is just getting off the ground right now, is the technical advisory body, the TAB. They just announced who's going to be a part of that. And I think it's about 12 or 13 attendees. And I believe they are the ones who are really going to be making the more detailed decisions around which particular, offset project types or which standards are actually allowed into the program. And I believe the way that works is that the TAB will do the review and will make recommendations, but that ultimately, I think there's an executive council within ICAO that then kind of has to approve that. But at the moment, I don't know if anyone's sure how transparent the decision-making process will be. Obviously, if it's more transparent, then we can get more of a sense of like what the reasoning is for why certain programs or standards would be allowed or wouldn't be allowed. If it's not transparent, then we probably won't get a whole lot of insight into that.
Thanks, Kelley. And then Stephen, I don't know if you just wanted to close with any insight on if people in your space are looking at those potential offsets in landscape level conservation or market-based planning.
Yeah, I mean, the topics started to emerge, last few years, and I think there's some hope there for this, but I think the question really comes down to whose responsibility is that landscape, and how do we connect those responsibilities together so that if we can provide a more sustainable, landscape overall, does that provide more assurance into the commodities that are being sourced from there, and maybe less compliance needs or compliance costs of doing things like individual certifications, but you can be more assured that these commodities are sustainable because they're coming from a particular area. And so how does REDD+ or other types of investments into those landscapes fit into that? So it's a good question, and it is something that is kind of being discussed and debated right now, and hopefully we'll see how these things converge. But I'll just kind of close because I know that we're out of time, and to say happy to follow up with additional, whether it's emails or phone calls or whatever we need to set up. And as you can tell, all of our work is done a lot through collaboration. So if anybody's interested in access to the data or collaborating on anything, to let us know.
So great. Thank you very much for that. I'm just going to wrap up here. We just wanted to thank you both so much, Kelley and Stephen, from Ecosystem Marketplace, for your time that you put in preparing your presentations and giving them with us today. And I'd also like to thank the Forest Climate Working Group and the Steering Committee for their support and guidance behind the scenes for this series. And again, for all those joining, the webinar has been recorded. It'll be posted to our website, and any supplemental materials, including PDFs of the presentations themselves. We got a few questions about that. And those will be up and posted in a few days at the Forest Carbon and Climate Program website at Michigan State. And again, if you'd like to get on our mailing list to receive information about upcoming webinars, please email forestry@msu.edu. And with that, thank you to everyone. I hope you all have a great afternoon. Thanks for your time, and we'll see you in the next learning session. Take care.